Hey, good morning, everybody. Welcome to America's Retirement Headquarters. My name is Chaz Price. I'm a certified financial planner and serving the Maumee community, Sylvania, Perrysburg for the last 20 years. I had an opportunity over my vacation a few weeks ago to read a book that I had been wanting to read for a long time. It's called Start With Why by Simon Sinek. If you've never had an opportunity to read the book, it is really good. I'll give you a quick synopsis. In the book, Simon argues that as consumers, we are being constantly manipulated. We are being manipulated through discounts and rebates and points and frequent flyer mileage. We're constantly being manipulated to make decisions, primarily because manipulation works. But he also argues that there are sales tactics that don't use manipulation, that use inspiration instead. And he calls that your why. So I wasn't actually able to really articulate what my why was for a long time until I read this book. And so I know now that my why is to bring Wall Street strategies to Main Street investors. I like working with individuals like you and me, hardworking Americans, blue collar, white collar, it doesn't matter. But I like the fact that we can all be treated equally. I think the best ideas should not be exclusively made available to the people that have the most money. I want you to have the best ideas, those institutional money management strategies that are usually designed and often exclusively offered to the accredited investor, the investors that have $1 million or $300,000 in income. It's not fair. I want you to be as successful as those individuals. So that's why I do what I do. And now is a great time to be talking about those type of strategies, those strategies that have led to some of the most explosive growth in the last 10 years. I mean, right now is earnings season, but it's also tax season, and it is also first quarter statement season. So you should be getting your first quarter statements in the mail anytime soon. We've had some of the best reviews that we've ever had this last 12 months because the market has just gone parabolic. And we had one client last week, their account's up 66%. They've never seen those type of numbers on their statement. And so we're doing those sort of things that are helping people like you and me, everyday Joe and Schmo clients, I shouldn't say Schmo, but Joe client, realize these type of returns that again have almost historically been exclusively available to the ultra wealthy. And so how are we doing that? Well, individual stock selection. We're working on asset location versus asset allocation. We're working on buying low and selling high, rinse, repeat, buy low, sell high. Those sort of things that sometimes go unnoticed by the average investor, but that are noticed by more wealthy investors. We're doing those things for our clients here. And one of the other strategies that we're doing is we're monitoring the markets. Regardless of how much money you have, we're monitoring the markets and making decisions about how to allocate your portfolio. Now, one of the concerns that the investment committee and the industry is sharing right now is that the market being up so high, you almost have to be somewhat pessimistic. You have to expect that there's going to be a pullback. How do you operate in those sort of environments as an investment manager or as just an investor? What are some of the things that you can do to help protect your investment, but to also not totally get out of the market and not participate in the event that we continue to shoot higher? And there's a lot of reasons why the market might continue to go higher. I mean, everybody's got a stimulus check. Interest rates are still very low. There's a lot of pent up demand for goods and services and products because people haven't been shopping. You haven't gotten to go, you haven't been able to go out with your friends to dinner. You haven't gotten a nice outfit. So now you want to go get that outfit. You want to go get a new dress and go out to dinner with your husband or family or whatnot and have some fun. And so people have also been saving very well. A lot of people save their stimulus checks, so they've got a lot of money available, some dry powder and cash to put into the market. So one of the strategies that work well during those type of environments, again, that are almost exclusively made available to accredited investors, investors with $1 million or more, are alternative investments. And so that's what I want to talk about today on our Trends at 10 is alternative investments. Now, an alternative investment is, examples would be gold and precious metals, business opportunities, real estate opportunities, private equity, private debt. We call it peer-to-peer lending. These strategies are typically more complex. They have a good measure of additional diversification, meaning it's not their performance is not typically tied so much to the traditional stock and bond and cash-like investments that you're used to. But they also sometimes come with some restrictions, such as liquidity, in that you can't always get your money out when you want it. No, normally you need to keep that money in there for 5 to 10 years. So one of the strategies that we are beginning to develop and we're looking at implementing into some of our clients' portfolios are what we call liquid alternatives, hedge funds, mutual funds, ETFs, investments that still can be traded on a daily basis so that clients can get in and get out of the market if they need to, but that give them access to some of those same derivative or same alternative investments like commodities, like gold and precious metals and real estate and private equity. And one of the pros of using the mutual fund, again, is the liquidity, it's the diversification features, and it also allows us to participate in what we call a long short. Now, one of the most successful, actually, I should say, most popular, the long and short alternative investment funds. So long and short just meaning that the investment manager takes a long position, meaning they accentuate through the purchase of options and derivative contracts, positions or stocks that they feel are really going to perform well. And then they accentuate and they take a strong position against stocks that they do not feel are going to perform very well. And typically there is a net long or a net short position overall in the fund. So that gives you access to enhanced returns when the market's up, but protection when the market is down. There's also what we refer to as net neutral funds, where literally they have 50% of the market in long positions, 50% of the fund in short positions, and your performance is somewhere neutral. You don't make any money, but you also don't lose any either, hopefully. So what are the trade-offs? The trade-offs are the fees. Fees can be extremely high in short and medium, in long and short funds. So we want to be careful to not dedicate too much money, and we try to make sure that we find the most competitively priced, well-performing investments in those categories for your portfolio. So that's pretty much what one of the things that we're working on in our investment committee right now is, should we implement alternative strategies into our portfolio? Got to consider it. The market's up already at all-time high. Some of our portfolios for the year are up over 12%. Most people would be happy with that sort of return on an annual basis, but we can't just kick you out of the market in weights, but we do have to take a pretty conservative, or we have to take a defensive position. So, that's Trends at 10. I wanted to talk to you about my why today. It's bringing Wall Street strategies to Main Street investors. How are we doing that? Through the use of alternatives like long, short, hedge funds, in some cases mutual funds, ETFs that are liquid, that provide you access to some of these alternatives, but it doesn't give you the illiquid lockup times where you can't get your money out when you need it. So that is our Trends at 10. That's what I wanted to talk about today. Hopefully you're having a good day. Looking forward to talking with you again. And keep in mind that on April 22nd, it's a Thursday, we're going to have a webinar again. I'm going to be hosting rollover planning one-on-one. No, it is not for your dog, although we are getting 2 dogs. It's going to be Forrest and Bubba. We're getting 2 dogs, Havanese pups. My fiance and I, we're excited. They're coming in June, so probably there's going to be a couple videos about our dogs. So thanks again for your time. That's Trends at 10. Appreciate it. We'll see you next week. Have a great day.